I'm lovely. Yourself?
All right. Well, we just had Stan come in for Stan's Corner.
Oh, Stan's Corner. Love it.
Yeah, we were talking about daily, active daily, and daily continuations. I'll put that out tonight. Um, this 3100 level in the SPOs, Langer's got 3103.75. So I'd use his number on the short term. ABB gapped up off that news. XLE still acts pretty well. Phillips gets above 73, then you'll get a momentum breakout in that.
Okay.
I was just looking at the Aussie again after your comments because that's back up and going again with all the commodities.
Yeah.
I think they're just going to come in and buy everything here in the beginning of the day.
Yeah, it seems that's what they do want to do. And why not? They're on the vaccine roll right now. So, but as I point out, I've been watching we're really getting a compression on the German Italian today, and it did yesterday too. And that's following some negative comments that's why the euro broke. There were some negative comments that came from Merkel. Number one, on Brexit, even though I don't think Brexit is nearly the important piece that the market wants to assign to it in the pound. Yeah, kind of hold. But they did hit the euro, which, pretty hard. Even while the yen held. And you know me, I need these yen and euro to both break out. And you see every day they just go back and forth. They can't. Today could be an interesting day. Because when you listen to Mnuchin and Powell, they're in full kitchen sink mode. That's the end of that story. That's what they're going to do. Because again, it's the issue of unemployment. And yes, if they gain jobs back, but how big? And again, the more I've had this discussion that the Fed is now in the social justice business, and people at first laugh, and then they think about it and they go, you know what? It's kind of scary. And I had somebody tell me that you could never say that. They'll never allow you to say that publicly because it would be very, very incendiary. But I don't see it any other way. And actually, I should pull back from it because Rubini is basically going down that path too. You can't help it when you read, the analysis of so much of what's going on.
All right. Well, the grains are ripping, the commodity currencies are ripping, and so are the S&Ps. So Here we go.
You know what? Yeah, here come the S&Ps. Doesn't surprise me.
The beans are above their 200-day. I thought they were going to stop there yesterday, but apparently they're going to keep on going. So
yeah, for the first time in a long time, and I don't buy it in big number. I buy it a little bit of Bungie on all the breaks. So I brought it the other day when it was $2 and a little over $2 over. I'm just trying to slowly build a core position there because I got to see if I'm right. So I'm going to put my money there, and I'm not going to risk more than $3 or $4, which in this market becomes criminally insane. Anyway, nice article on that ABB. That's one. I'm sorry, I hold a core position, but I haven't been building it. Fuller, as you can still see, is just such a miserably managed company.
All right, what's the half of that gap? The half of that ABB gap is 23.42, guys.
So nice, you know what? And it's really a reflection about, again, people don't want to admit if Europe can get that friggin' thing done, they would be in a much better position. When I say, that especially that program that Schweible had basically, come to back. So work ahead, as we say, work ahead. I sold out my yen this morning, so I'm just holding on because it just can't clear any of these hurdles. So I'm just holding the euro and see if we
Yeah,
can get some.
it's a lousy place in the futures on the.
It's terrible.
Yeah,
It's
it's
terrible.
right. The low was good, but now it's up in a resistance.
Well, and you know what? And I actually had bought them last night, lower on the night, at following the Tonkin, which I don't even know why anybody gives. But there are people talking about the Japanese 40-year, the JGB, which is really moving up in yield, which then forces Japanese investors to stay home because they're getting, I think the 40-year JGB is over 50 basis points because the Bank of Japan is not intervening there. So they're doing more borrowing and people, oh, okay, I'll reach for the yield there because 60 basis points on Japanese debt is far better than 60 basis points on 10-year US debt, in my opinion. I am not in the deflation camp because the Fed, because they'll just, will it get there? I don't think so. Now, there was an article out over the weekend. I don't know whether anybody saw it on Bloomberg. Let me go to it.
Yeah, look at this low here on the weekly, and the JGB is a 200-week moving average.
Oh, yeah. We're in some very interesting areas. But there was an article. Let me. There was an article. It was on Bloomberg. It came out on Saturday, entitled "Americans Hold Huge Pile of Cash That's Key to Economic Recovery." It's an interesting read. It's nothing new. Alex had actually written about it before she went on hiatus. To me, a very interesting and important piece, by the way, because it talks about how much money are into savings, and the bulls are thinking that once we end any type of lockdown, that savings will pour into the economy, whereas the bears are going to know the savings are going to be retained because too much uncertainty, and that seems to be the key to everything. Is that discussion. Where it goes, we'll see. But it was a very important piece. I'll send it to you, Judd. You can post it wherever the hell you want. But let me tell you what, if there is a cash hoard of savings, I think that's what will lead the Fed to hold its nose and go to negative rates. Because they're going to, if people are holding on to that cash, the Fed's going to try to force it into the economy to create some velocity, which is why, I've been busy in the ways that I have been, which is purchasing, as I've said, ag stocks and mining stocks. And I think the mining stocks have been pretty good. In fact, I got a lot of notes from people, none of your people, but a lot of people from the original with Luis Gavet, when we talked, which is a month ago, we talked about Freeport, and it's had a very nice, it was up 33% for the month. So not quite 30, I'm sorry, probably about 28%. So interesting that it is trying to, and then there was an article, I don't know whether anybody saw it, that was put out last night. Again, one of my blog readers, even on my blog, he sent it to me on Freeport McNamara as a potential buyout by either Newmont. They were trying to make the case which was going to be a better fit. If you get a hold of that, it was a Barron's article, so act accordingly. And that's really it. And I'm going going to watch Europe very closely. Because as I view those spreads, the euro, let's see, where are we at now? The Bunds are down 120 ticks, and the Italians are down 26. So, and of course, we've seen the movement. It was interesting that when Merkel made those negative comments, the DAX actually went down too, and I think took other things with it. So.
Yeah, it was kind of interesting that the Italians took off first yesterday. The metals went with it.
Yeah.
Then they stopped.
Yep.
Then everybody sold all the rates all the way across the board, both sides of the pond, and the gold still held up. And now today, it's finally responding to everybody selling these energy names.
Oh, are they selling it? I'm not even looking at them.
All right, not the energy names, the gold. I mean,
yeah, because as interest rates go higher, people go, oh, let's sell some gold. I think it's way early in the game. It was interesting though for month end, quarter end, and the quarter end is a big deal for so many hedge funds. People really need, and I'm not talking anything nefarious. They've been doing this for years, so there's no secret there. But they paint the tape, and they got it through $1,800 with a very powerful close. On the last day of the month, on the last day of the quarter. Very interesting. So now it's corrective today because why? Because the equity markets, I kind of venture almost that they're more tied together than people think.
Yeah, and the dollar's weakened, against the ruble, the real.
Yeah.
Everything. Peso, big time.
Oh yeah, this is got a lot of shit going on here, as we say. But I really think with the yen is, let's see where the yen holds up here. I have some orders to buy them back. I don't know, but I need to see the euro really take the lead here in the short term for this premise to be right. But we'll see, because there was nothing. I was in driving, so I didn't listen to the testimony, but I read some of the better summations of it. It was more Powell and Mnuchin really continued to paint themselves in a corner. Now it's just a matter of how big, and everybody's hoping. The Senate Republicans were hoping, to hold their powder here because, they were really pushing for the lockdowns to end. But let me tell you this, having driven through the middle part of America, so I went Colorado, New Mexico, Colorado, Nebraska, Iowa, there's not a whole lot of mask wearing, which is not a good thing. And I think even traveling by road, you'd say, well, okay, you don't want to get on a plane, fine. But there needs to be more diligence. Because I think people are going to be uncomfortable, especially because as these numbers jump up. I have kids in Florida, grandchildren. I just came from Arizona, hotspot. Texas is exploding. California, more importantly, because now it's hot. What are they going to do? They were not looking for this. And you have to really think, as I think we talked about this on Friday when I went to my doctor for my physical down in Arizona, and he made a comment that, it's kind of boggling people's minds right now because the heat was supposed to kill off the virus. It's amazing that people aren't talking about that. And yet we're not seeing that, which is, I'm not trying to inflame things, but it's worthy of a question because that was the anticipated effect, right? Come the summer, viruses die, heat. But we know with the explosion, these are all hot places, and the numbers are turning back around, so turning up, so which is going to slow a lot of things. Now it looks like baseball won't happen, and yesterday was a classic case with that news about Cirque du Soleil going to bankruptcy. I mean, that's why the economy is staggering in the way that it is, because when you get those layoffs, the multiplier effect or the feedback loop from here's a group. It tells you really the situation in Vegas. And what was that? 15,000 people for Cirque du Soleil. You got, the entertainers, everybody who goes with it. So and now. Um, uh, the theater district in New York closed, all these concerts, these are a lot of jobs and they're just not coming back. You can't recoup that. And people will be slow to it. And I think also, again, it's, when the unemployment numbers were going, and everybody was saying, well, why? Where's the capital expenditure, especially with the Trump tax cut? Well, in the capital expenditures, again, just think if you had built $100 million plant, for machines and spent a lot of capital instead of hiring people, this was far easier for businesses, all kinds of corporations, to lay off people than to absorb the hit from that capital expenditure. And that's what they've been doing. And they're going to be slow to bring them back. Now you might get capital expenditure because they're going, wow, having all these people with all these headaches, we may be better off now investing in machinery, depending upon what the depreciation allowances are. So the unemployment situation is going to be slow to recover. I read Harley Bassman, who's really good. I don't know if any of you, he gets pretty deep, but really a good piece of work, talking about this. This, and right now, it's like Powell throws around 9% by December, but it will not move the Fed from where they are. The real issue, I think, for everybody is to watch these savings, because if this savings jumps again, I think the Fed will have to go to negative rates in order to get people to start, to take that money out of banks. Banks aren't making money with it anyway. So they're going to really be in a dilemma here. Is that going to be the next leg to the commodity and weaker dollar? Because they all seem to want to. So commodity rally, weaker dollar sets a nice table, so to speak. But we'll see. We'll watch the 2-year notes. But all of these are in play. Let's see what's going on.
So Ira, Michael's in today. If you want to talk to him about China.
Yeah, what's going on, Michael? What's Mr. Michael got to say?
Well, he said, "Hey, unmute yourself, Michael, and talk to us."
Come on, Michael, let's go.
Tell us about what your view on Hong Kong and their moves across the China Strait with Taiwan.
Hello.
So, my view has always been, and I know Michael will disagree with me, that Taiwan is a sideshow. Always, it's an interesting sideshow. And again, if I'm in Hong Kong, it's not a sideshow, but I'm speaking from a global political perspective. It'll always be Taiwan. And I know the Chinese leadership in Beijing has told the Taiwanese to kind of lay low here and not fan the flame, so to speak. So Taiwan needs, and don't think, the United States is so wishy-washy right now as to alliances. I would be a little quieter. I wouldn't be looking to fan those flames. So I don't know what Michael has to say, but
Michael, unmute yourself and tell us your thoughts there. Oh, good.
I did.
Oh,
let's have it.
Let's have it.
I think what Ira is thinking is right. I don't think the Chinese government wants another all-out conflict, in the South China Sea or on the Taiwan issue, because they are, in conflict with India. That's the west side of the border. So if they take on another all-out conflict over there, by South China Sea and Taiwan. That's the East Corridor of the Chinese geography. So, so that would put them in a really difficult situation, right? What if Russia does something, erratic at this moment? Then there will be, enemies up north, enemies down south, enemies on the west side, enemies on the east side. So that's clearly not something they could handle, right? So I think the Taiwan issue, what they're going about, the tactics to go about it is to, just don't talk about it. If they don't talk about it, it won't escalate. So they can deal with Hong Kong first and then turn their back on Taiwan, whatever. I think it's down the road, but it could take some time before they could resolve the issue with India.
Yeah, and you bring up a good point, but people make big things out of this. Listen, in 1962, the Chinese and India fought a vicious border war in that area.
Mm-hmm.
So
and Vietnam too.
That animosity has been going on, as has in the Northwest, the Xinjiang area, of course, where the issue with the Uyghurs, but that's been when it was the Soviet Union with Stalin, that area has been a contentious area too, because Xinjiang is such a mineral-rich province, which is why the issue of the Uyghurs, just from a historical contextual sense, and it's not to justify what's going on there, but the Chinese will turn and tell you that, hey, this is as they say, a domestic issue, and they're busy moving people because they want to secure that region. I mean, it's so minerally rich as it has been. The Russians had eyes on it, and Mao was never going to let that take place. Just like the Chinese had eyes on Siberia, and Stalin was not, because actually the Chinese were quietly colonizing Siberia until the Russians realized what was going on, and they sent everybody home. But the Uyghurs are in a very difficult place, and the world is actually very full of shit in the way it deals with it. The United States is raising the issue, but one of the great things is that one of the biggest traders with China, of course, is Iran, and Iran, who's the defender of Muslim sensitivities all over the globe, is not stepping back or pulling back from their trade with China. So, there are a lot of things that go on. You scratch your head and you go, come on, does nobody call out these inconsistencies, this nonsense? The Chinese are not right, but they're going to say, hey, it's a domestic issue. Why? Which is why every time we raise the issue, they will raise racism, and under the, they're trying to pull back from it. But what do they call that? The wolf in the Chinese Foreign Service now, and they get very aggressive out of Chinese embassies wherever they're located in pushing back to like the Hong Kong. When certain countries will bring up Hong Kong, the Chinese will bring up the issues within those countries. So there's a lot of things going on in the world right now, push pulls, and Michael, as you talk about the India and China, which fans the flame for anybody who has a anti-China bias. Well, India, these are not new things. They simmer and then they get elevated and they simmer, and wherever you want to rattle it, you can rattle it. It's the same thing that what's his name does in North Korea when he wants to shift the attention. He'll fire off a few missiles. Hey, I'm still here. You got to pay attention to me. Yeah, it's very commonly done.
But I think where they're going with this kind of rhetoric, would it be something bigger? I mean, would it be the backdrop of another new age of Cold War? it's,
Good question. I don't know.
I mean, well, the personality of the CCP has changed so much in recent years, recent 3 to 4 years, you know, changing from a country where, just silently and, secretly makes its money, improve its economy, to a country that's very outspoken, you know,
Yes. Yeah.
and they assert control in so many African countries. That just scares me because Africans, well, especially the North, they, it's it's a very poor region. So if you give them money, they will do anything for you, basically.
Yes. Yeah. No, that's true.
You
But
know?
but China did when everybody else in the '60s was not paying attention to Africa. The Chinese were very active as part of the non-aligned nations. The
Yeah.
Middle Road was out of Sukarno and Suharto. But the Chinese were about. They built the Tanzam Railroad. They put a lot of money into Africa, so they have long established ties. Now, I'm not saying that everything they go in there and do is good. It's not. Borrowing money from the Chinese to do infrastructure projects as a counter to the World Bank and maybe the IMF, comes with all types of strings attached, and the Chinese do get aggressive, just like in the Congo. They have a lot of mining interests in the Congo.
Yep.
And they send in, and they're aggressive in defending those mining interests, very aggressive.
Yeah, and the ports, they snatch up very good amount of ports over there by the African coast.
They're very infrastructure sensitive because they know that's important, and that's where so they do have a long history though of being involved when others weren't, and it gives them a leg up, which there's really not much you can do with them anyway, because as a member, one of the standing five on the UN Security Council, you can't sanction them or do it because they'll veto everything that comes out of there anyway.
Yep.
So, yeah, I mean, they know the way the situation lies. So these are all good points, and there is a lot of aggressiveness, and there's pushback. Believe me, and the U.S. has its own problems, its own vulnerabilities. There's no question, and there's a lot of inconsistencies around the world. The Uyghurs, I don't think the Chinese give one crap what the world has to say, because they view it as a domestic situation, and if they paint the Uyghurs as a threat to that region, hey, that's no different, really, when you think about it, than when the United States slaps on tariffs on aluminum and steel for national security, right? Because all you have to do is say, hey, this is a mineral-rich area. This is vital to our national security. We really don't care what you have to say. And that doesn't make it right, but that's the world in which we live in, with the crap that we all have to wade through when we look for some type of judicial outcomes. But it's interesting. We all want mercy for ourselves and justice for everybody else. It never seems to fail. And really, you have so much more of it, and it's so much on the table in areas like the euro just went higher, and the yen is come up, and so on. We shall see here. But I think these are good points, and it just shows how much is out there. So when anybody we just try to change the narrative. That's it's Ben Hunt's great work, the work on the narratives, because that's what you see. It's all about the narratives. What's the narrative of Hong Kong? What's the narrative of Xinjiang? What's the narrative of the Black Lives Matter movement? Whatever you want to latch onto, you can latch onto.
Mm-hmm.
All right, here, Lars has got two things. 112.90 is the level you need over in the euro on the point and figure.
Okay.
Lars says, Ira, is it true that gold is considered a tier 1 asset in the context of Basel III? Does that play any significant role in the current gold rally?
That it's a tier 1 asset?
Yeah.
Well, I'm not sure about that. but I'll speak to the fact that when you do use
Well,
gold,
something's happening. I think there's one piece of news.
what happened? Which piece we got?
I don't know. The market just spiked up.
Yeah, the market did spike. Yeah, interesting.
Yeah, and they've been buying pounds, Aussie, Kiwi.
Oh, it's the ISM manufacturing number.
Oh,
Oh, yeah, let's go there. So, you know, it's like any other asset though, that it probably gets severely haircutted, meaning, and which isn't bad. So if I had $10 million worth of gold and I wanted to use it as capital, they may haircut it by 50% or 60%. So I'm not sure that it's nearly as efficient. Like, you look at sovereign debt, that's a zero risk weighted asset. So unless I really, now for me, yes, if I owned a trading bank, if I owned a merchant bank, would I have some gold? Absolutely. But it probably would not be my most efficient use of tier one capital. But I don't know that factually. Okay. That would be my summation. I mean, I've read Basel enough where I should, but I've never looked at it in that terms, because until they change moving away that all sovereign debt is zero risk weighted, you know, why would you? It would be expensive, I think, to use something like gold, but because its fluctuations, you know, are so dramatic. So I'm sure they haircut it. So, you know, I don't know if that's the answer you want to hear, but
all right. Well, I got one other question for you on the Hong Kong stuff, Ira.
Yeah,
I've been meaning to get back to it. You know, Bass did a trade, I don't know what, a month ago. He's looking for the Hong Kong dollar to get blown out of the peg.
Oh, he's had that trade on for quite a while, by the way.
Yeah. I mean, do you think you think that can happen?
Oh, you know, I know there was an article about it today. I read it.
Well, I don't.
Yeah. What are you asking me? Ask Mike.
Yeah, we're asking Michael. Okay, so Michael, you don't think they can do it?
No.
Okay.
No. The Chinese, the central government is they're so capital rich that no trader in the world can overthrow them. No, there's just no way. There's just no way. They wouldn't. I mean, any central banks of the world, they have to care about their credibility and forward guidance and whatnot, or except, you know, Swiss National Bank back in 2015. But the PBOC and the forest the FX division of the PBOC, they are so aggressive, you know, in defending the Hong Kong dollar and the Chinese yuan. I mean, how long have we been? I mean, since we have the expectation that the Chinese yuan will trade above 7, and till it happened, it's like half a decade, right? Since we have that notion of Chinese dollar devaluing from 6.2 to 7, it took 5-6 years, you know, before the Chinese can finally, you know, accept it and let it go. Now it's trading above 7. Right. So in order to break the peg on the Hong Kong dollar, it has to be a massive liquidity issue that even the PBOC couldn't handle. And I think if that scale of a liquidity event, the whole world's in deep shit. It's not only Hong Kong. The whole world will be in deep shit. Especially what I think is the Philippines, Malaysia, Singapore. These countries are so prone to the Hong Kong dollar weakness because they trade a good deal of goods and exporting labor force to Hong Kong. They couldn't take this hit.
Yeah. Now, Michael raises a good point because the article today, I think it was in the FT, talked about in order to hold the peg, though, would the Hong Kong bank have to borrow from the People's Bank of China to have the dollars to sell to hold the peg? Now, let me tell you, the article revisits when they tried to break the peg years ago. Okay, it's the same thing, and I'm going to give you a little education here, which people, when you want to hold a peg, you can raise interest rate, overnight interest rates, and make it prohibitive. Now, all you're doing, of course, is inverting the overnight curve dramatically. Just like people don't understand in 1992, 93, when Soros and others, after they succeeded in pushing the Brits to drop out of the European currency, or to stop defending the pound, to hold it at a certain level, they went after the French franc, because the French franc, by all measures, really should have gone with it, especially after the Italian and Spanish were depreciated, because it really put France in a terrible spot. But the French, and I'm going to ask if anybody knows who was the president of the Bank of France at the time. Anybody? 1992, 93.
Okay, you got me stumped.
Okay, Jean-Claude Trichet.
Oh wow.
So he cost me a lot of money because I also thought the French should break. And I was riding pretty high after the UK deal. So I would, me and McLennan put a lot on. We would sell the French and buy the Deutschmark. So, but what the Bank of France did was raise overnight rates up to 100% to break the back of those trying to, harm the French. And the policy was called Le Fort Franc. And they were prepared to take it higher. That's what Hong Kong did. When the Hong Kong dollar was under threat, a couple of times they raised overnight rates, sometimes to 200, 250%. And they make it unbearable for the shorts to sustain. Now, it hurts the economy, but they go, well, we'll keep things going because the rates aren't really going up as you go out farther on the curve, maybe somewhat. But it's just the cost of overnight borrowing, which you have to do to get the currency to get short. So we're not near to that yet. So I think Michael is dead right on target. And that's just one of those tools that you'll watch when this really gets into play. And believe me, the headlines will be, Hong Kong, is at 200% interest. It's a mechanism, just like you can lower rates. But as Joseph Schumpeter classically dialogued, I can get you to stop borrowing by raising rates. I can't get you to start borrowing by lowering rates. That is the concept of pushing on a string. Michael's point, that to me, dead right on target. I know Kyle Bass and others, they're looking for this to be a monstrous play. I have to see more, to tell you the truth. I really have to see a lot more.
All right, so 112.62 are the euro buy stops, and you need over.
I'm sorry, what is it?
112.62 are the euro buy stops
in the cash.
In the cash,
yeah.
I only use cash, guys, not futures. And 112.90-ish is where the point and figure turns up on the 25 by 3.
Okay, and as I say, you want to see the euro and the yen both rally together, like we saw a few days, but it's been broken down as we went into the month end. If the yen was up, the euro was down. If the euro was up, the yen was for the last couple of days. This will be a way, again, because to me, the yen is really key to the dollar.
Yeah, they just got the stops. They ticked them.
All right, good.
Yeah, 63 high.
Good. I'm glad I've been on with you guys because
You see, you haven't been clicking the mouse. You've just been sitting
Yeah,
there.
I've been watching and not clicking is correct. Although I did buy some yen back because I have to test it. You know,
Yeah,
again,
I like the Aussie and the Kiwi a lot, especially with all the commodities going.
yeah, look at copper's back. You know, it was down. You know, because the copper trades with the equity, the correlation with the equity market on somebody's algorithm, on some major algorithms is certainly big.
And
So
you're up here at the 274 level is going to be the 200 week.
I know this is a real, and it should be. Listen, but that's what you wanted. Listen, it was the same with the grains, right? We
Right.
saw it run into overhead resistance, boom. Saw it run into overhead resistance, boom.
Yeah, and then last night they just opened up for the new quarter and took off. Yeah. So because yesterday I couldn't figure out whether that was just a squeeze at the end of the quarter where people had to cover, or whether it was dollar related or what was going on with it. So that's why I just sent out that thing to guys to make sure they took off a bunch of stuff at the 200 day in the beans.
Yep. Yeah. Very guys, really nice work. And you know what? Rob Stewart, excellent.
Yeah, Rob's been all over it.
Excellent. Excellent. I'm sorry I didn't go through Amarillo because I honestly would have stopped and roped a few cows, and especially now that I've been watching Sam Elliott in the ranch. So Rob's in trouble because I know how life is on the ranch now. Everybody's getting laid and doing quaaludes and having a good time.
Yeah, well, I think Rob's out right now because he's racing the geriatrics on the treadmill.
Oh, Ira,
yes, Michael.
I've been wanting to ask you this. We know the Swiss National Bank. The Swiss franc was under upward pressure during the 2011 the European debt crisis,
right?
And then throughout just till 2015 when they unpacked the Swiss franc.
Yes.
Now, would it be possible that they have been, like you said, they've been printing Swiss franc to sell them on the forex market and exchange for US dollars, and then you use those dollars to buy US stocks or assets, US denominated assets. So would you think if the US dollars, let's say, undergo a massive devaluation, what would they do? What would the Swiss National Bank do?
Oh, okay. Let me just, I'm not saying a massive devaluation. Steve Roach is putting out there 35%. And I'm sure you're a fan of Steve Roach, right? No.
Well,
huh?
I read an article too, but not really a fan.
Okay. Because he has such a big presence in the Chinese financial world. They have a lot of respect for him. So I shouldn't assume that, but he makes his way around China, and he has for 20 years. He's been really one of the people who've been very prescient and knowledgeable. Him and Michael Pettis, I give a lot of credit to, as I do Charles Dumas from Lombard. Judd, what's the level we need to see the test in the euro at?
Well, we got the stops.
No.
112.
No.
90.
Where we go if we even take this out?
113.40 again.
Right.
It's going to be the 200. Let's just check and see exactly where it comes in at today. It's 113.33. You need a close above there. We've never closed a weekly close above 113.33.
Okay, and then we're good, and then that sets up a target for the 125, 126 area.
Right.
So, Michael, that's not, it's a nice move. We hope to catch it. I'd like to catch 12, 13 cents in the euro. Believe me, I'm trying to price some options. I've been, because the vols are really low because it's an ebb and flow, but if we break above the 200 week, we should get some increased volatility. So I'm looking at that now. Maybe I'll probably by August, maybe some September calls if I get my crap together.
Yeah, and that matches the 50-month as well. So it's a really great level in the averages. It matches our other work.
Okay, so
We're
there.
Yeah.
We're there together. So I'm not looking, because again, and I know everybody loves that phrase, the cleanest dirty shirt in the basket. No, to me, I'll put it to Richard Farina's book, Been Down So Long It Looks Like Up to Me. That's what the euro looks like in any kind of positive news. And Merkel has a lot at stake here. So she came out with negative comments this morning. At least that's what was reported on some of these bullshit. Let's see, what was? Oh, Merkel says we need to be prepared to deal with the UK. What else did she say? And this was reported on Breaking Markets. Merkel says EU members still far apart on recovery. But as I said, when I saw that, that should have led to the Italian bonds weakening against the Bund. And it never moved. The euro got hit, but it's like the currency traders don't look at bond markets. But having known thousands of currency traders at major banks in my life, I know that's the case. Because every time I would go into a bank trading room and if I knew the person who ran the room, and I would always be amazed. At Citibank, I'd walk in, I did a lot of business at Citi and a lot of friends. And I could sit and talk to the guys who ran the room. And I said, how is it that you don't have your bond traders sitting next to your currency traders? And they never did. Because they viewed each other with animosity because they were two profit centers and they didn't want to share what they had, which was beyond me. But that's why Goldman, when they were a partnership, they did have that set up because they wanted their currency people to know what the bonds were doing. We're all in this together. We're a partnership. Don't be at odds with each other. Work with each other. I said, hell, if I ran this trading room, I always want to know what the bonds are doing. So it didn't surprise me because the bonds didn't give it up today. Now that could be that the ECB was in, buying Italian all morning so nobody could sell them. That could be. We don't have that information, unfortunately. But that's the world in which we live. So we had a better ISM manufacturing prices. Construction was down. I'll tell you what. The one thing I did see, and I drove 1,800 miles plus, a lot of road construction, and I would usually be going, oh man, why are they doing this now with unemployment so low? I was actually happy to see it. I mean, there was along all the interstates, and I took what did I take? I took 25 up from through Santa Fe. So I caught that from Albuquerque up through Santa Fe, up to Pueblo, all the way up to just before Denver. Got onto 70, then went to 80. Lots of road construction. You know what? I'm happy to see it because that's jobs and at least some sense of infrastructure. Lots of it. And it doesn't even.
I'll attest to that too. I saw
Yeah.
tons and tons of it. New York to South Carolina via I-81, not 95, but I-81.
And that doesn't even matter. But I'd rather see that, and it can be done in so many places. So hopefully they'll get that together one day.
Yeah, in Los Angeles too. There's a lot of construction going on.
Yeah, no, that's where they should be spending money and allocating.
They got it around here, but again, they got 10 guys sitting and one guy working. They should have the Chinese do it, so it'd be done in a week.
Yeah, except that I'm not going to yell about it when you're trying to put people to work. I know. Believe me, having grown up in this environment, in the whole Chicago, it's like I was on a Zoom conference with some very high-line Chicago real estate people. I don't know if I told you this. and they, with the police, I said, I'm going to ask you all of this. I said, I can't see a show of hands, but I'm going to ask you if you've ever written a check to the Democratic Party in Chicago to candidates because it was good for your business. Anybody who hasn't, say it. Well, there was not one nay. I said, therefore, you're responsible for all for the whole institutionalized everything you're crying about on, as we're talking here. You're responsible because you've kept this a one-party city 90 years, and you've made so much of this because I grew up with it. Listen, I grew up in the city, and I grew up with a lot of people who became police people who I wouldn't trust without a badge, not for theft, but because they were nuts, and they were always in, So, and believe me, I say 98% of them are fucking great people and do an outstanding job. But there's stuff, and you systemically if you write checks to the Democratic Party of Chicago to any candidate over the last 50 years, you bear responsibility. I said, I can honestly say I haven't written a check. I'm not a fan of the daily machine. I know how it works. I grew up with it. So when you talk about streets and sand and all the places of patronage, I know. So you do bear some of it because, Judge, we could poke fun at it, about how many people are not working, but at this present time, I would rather have 10 people out there. I have to tell you, because you're throwing the money anyway. You know what I'm saying?
I'm just being facetious because
I know. I know.
It's good to see they're fixing the potholes.
Yeah, and I'm pushing back a little bit on it because, listen, I know, but again, it's the times in which we live, and they are difficult times. And you saw the budget deficit increase dramatically. Well, you know what? If you're putting people at least somewhere and they're going somewhere to get to work, I'm all for that. I don't know what they're spending money on right now, honestly. And the Republicans tried to block it, thinking in the Senate, thinking that the lockdown was going to end, but now you're going into a new lockdown. So, and the Democrats, I have to say, and I'm not a fan of his, what's his name from New York, the senator. Not a fan.
Oh,
Schumer, but he knows that they're vulnerable, so he's going to push hard to get whatever he can, and he should. That's good politics. He's calling McConnell out, and the fact that McConnell put on a mask and is advising everybody to wear a mask, Schumer knows he's got him in a situation where he didn't have him 3 weeks ago. But with this surge,
they just lost a Republican seat in the House in Kentucky yesterday.
Yeah, this surge is really an issue, major issue, because it's going to be hard to say no. Because again, you look at Cirque du Soleil and other businesses; these are major numbers, and they're not going to come back. So, and the Fed has already told you that's what they're concerned about. They're most concerned about the people who were last hired and first fired, and they're going to work hard to get them back into the labor pool. And I'm not discussing that. Morally, I agree with it, but not from a financial perspective. I take a whole different view. So that's what keeps the Fed in its situation here, and they will be lower for longer. How much lower? They would like to be able to sit here and really not have to do yield curve control or to go negative. But I think if the savings numbers continue to perform in the way that they have, they will be forced to go to negative interest rates.
Nominally or realistically?
Well, they're negative. Real rates are negative now, I would argue.
Yeah,
but I would say nominally, Mike. That's right.
So Ira, there was a Patrick Henry, the Republican from Cherryville, North Carolina. It's in the western part of the state.
Yeah, he's nothing like his namesake, but that's okay.
Yeah, but he's good. I mean, he is going to be a rising star in the Republican Party.
and he knows it. You know, actually right. When it comes to financial stuff, he's pretty good. He's pretty good. And he seems to be able to talk off the cuff. That's what really makes him good. Yeah, I'm sorry. It must Angela.
I got something really obscure for you. You know, we're talking about you know, the unemployment rate, the underemployed, the unemployed. I got an alert here that block cheddar cheese prices on the CME have been setting new all-time highs, mostly as a result of reduced milk production. So all of our peach prices are going to go up, and also the Farmers to Families food box program. So, you know, we're going to start to see these effects, you know, money printing, weaker dollar, shortages as a result of the virus. That's already, you know, filtering through. And, you know, I go back to your, you know, how the Fed has become, gotten involved in socialism. I still think that's going to be the catalyst for a lot of people getting pissed off.
I didn't say socialism. I said social.
Well, they're getting socialist. They're getting more you know, their morality. Let's call it that.
Well, they're making decisions based on social inequities.
Yes, yeah, and I agree with you 100%.
Yeah.
And we're going to see the result of that in skyrocketing food prices and energy prices. You know, squeeze the water balloon.
Yeah. No, listen.
And I didn't even know that block cheddar cheese traded on the CME.
Oh yeah.
And milk and butter.
And milk.
Heard that?
And milk futures, by the way.
Yeah.
You know, it said milk production has declined 1.1% in May as dairy farmers culled their herds in response to demand plunging from restaurants and schools.
Yeah. Well, you know, it's the institutional food. And my daughter's a chef, and in fact, she drove home with us from Scottsdale, and and she has told me, that is what's really killing the purveyors, because there's no institution. The cafeterias closed. This closed. Now I'm back here in Chicago. My wife went shopping last night because I know I have to be home eating. I was thinking about and on the road I saw it. We ate at Perkins yesterday morning for breakfast, and they had, all the people who worked there were masked, and we wore masks in, and they had hand soap, and we sat distance. It was social distancing, so that was good. But you get a good sense of what's going on, and
good road trip is an interesting thing to do.
Mandatory, but where I thought people would be traveling a lot by roads, I'm not convinced of it now because of the inconsistency. And I think that's going to really affect people.
Well, you know what, Ira? Here in New York, right? Cuomo just added like another 8 states to the quarantine list, right? If I were to travel now back to South Carolina, I got a quarantine for 2 weeks. I'm convinced that that's the way these governors are going to react. So instead of announcing shutdowns all over again, right, they'll just announce these mandatory 2-week quarantines, which serve the same purpose, without coming out and saying we're shutting down again.
Yeah, that's what they're
Yeah,
trying to get away.
It would deter the travel interest.
Yeah, look at this GoldinEuros, you guys.
So, Judd, all your cheesehead friends in Wisconsin are going to be happy.
Oh, they've been pouring out their milk. But look at look what the rally in the euro's doing to the gold.
Yeah,
I don't know
that's
if
right.
It goes very far, but it's something you guys need to pay attention to.
You know what, Judd? That's a good catch because, I dabble. I always come back. Like I came back to the gold Swiss and did really well with it today. I'm just dabbling. I've tried it a few times. It ain't working, but I have enough euros. So many euros on right now that it's okay.
So, and the other thing, you guys, is you're talking about this consumption stuff, right? And in Chicago, JetBro is the wholesale outlet for all the restaurants and everything else.
Yeah.
And you need a card to go in there and shop.
Right.
They're now open to the public, and they'll come out, and anything you buy from them, they'll come out and put in your trunk.
Yeah.
You go to Paulina Market, they won't come out and put meat in your car. I wrote the guy a note and said, well, I've been coming there for 30 years, I'm not coming there any longer.
Yeah.
So, Ira, what's the catalyst we need to keep the euro buoyant? I don't, other than some sort of Corona or euro bond. Is there what else could they possibly do? Do you think?
Kick Italy out.
I don't know. I don't know. I think that the minds that it is getting there.
I mean, do you think that this is just another trade within the whole circle of competitive devaluation?
Well, they would like to, but I think it's starting to wear thin, and people are going, well, are there better values that I can change? And do I want to sit in dollars? You're not being paid to sit in dollars. Usually you get paid something, but you're not getting paid to sit in dollars. So you're making a big call, and the judgment was, well, if the U.S. equity markets are doing well, that's good enough for me. But if it's like other people want to talk about, how good Europe's doing, blah, blah, blah. And I think there's a lot of truth to that. So that Europe, meaning better, when I say they just offer better value, it's amazing how many private equity groups, have these big pools of capital ready to purchase European assets. Because European assets have way underperformed U.S. assets for quite a while. So if you thought that there was going to be some potential upside, why wouldn't you buy euros and buy euro-based companies and not even hedge your risk and take, that's a good risk. And some of the dividends are just as good there, if not better. So, do your homework and figure it out.
Yeah, excuse me 1 second, you guys. So you got buy stops at 27.96 in Amazon. Langer's had a 28.15 target in there for a while. So, and you've got an hour left in this capital flow, and it's a positive capital flow. So look for those to be elected.
Ira, would you, on a relative value basis then, do you think you would nibble on Japanese banks?
Oh God! You want to talk about debt?
I mean, if we're going to do the relative value discussion, I'm just curious. I mean, but you know what, Judd? Let me just back up for a second.
Okay.
If our equities, right? If the S&Ps go to our new next matrix number, Judd.
Oh yeah,
do you think that means that we do get the crack in the dollar and the breakout in the yen and the euro?
I would say yes.
Me too.
And you're already starting to see it.
All right, so that you're answering your own question.
Yep.
The Japanese banks, I'm telling you, I've been in there for 9-10 years. I can't get hurt because I've already earned more in dividends than the stock cost me. But the one bank I've been out of J.P. Morgan, as Judd knows. I've been out, but the one bank that I have been buying on this break is UBS, because I think UBS, which is, as Mike talked about Switzerland, but the Switzerland's the greatest laboratory experiment going on, and nobody talks about it.
And it's an oscillator breakout right here, Ira.
Well, I'm just saying, I like what they're doing. First of all, because Axel Weber is involved, and I'm a big fan of Axel Weber, but he's been involved for quite a while now. But I think that UBS is going to kill them. Is going to kill them all, because Deutsche Bank is just a mess. But as a wealth management agency, because that's what UBS realized. You know what? Everybody tried to follow the Goldman model of a publicly funded institution being nothing more than a hedge fund. And you know what? It was just fraught with problems. So if UBS goes back to minding its business and being a Swiss-based bank, I think UBS could really outperform. I don't know what the dividend's about 4.5%. You know what? They seem to, they went through that bad period when they were so aggressive that they did so many shitty things that they've paid a substantial fines for. But that's just, that's actually one of my, of all the banks, that's really it on a global basis. I'm a big fan of it.
Yeah, it looks really good. I mean, it wants to go up to this, you got a weekly gap from 12 to 1289. Well, no.
Yeah,
there it is. 1236 to 1289.
Yeah, that's right. And it's a gap that's existed since, February.
Yeah.
So
it wants to go up there and test that. And that's a big breakout on the daily on the oscillator. When you see that, those oscillator breakouts, and it's above this near gap here at 1149.
Yeah, it's just getting some momentum.
Yeah, that's a momentum number.
Yeah.
Yeah.
Which oscillator is that? The 20-day?
I don't know. Stan programmed that in.
Okay.
So ask him what it is.
All right.
When you talk to him. Here, what? Let's see what it is. I don't know what it is. It's I'm not sure what he's got in here, but he programmed it so I can see it. So I can instead of seeing it down here and trying to figure out where the crossover is.
Yeah.
You see it on the chart, which is great.
That's a reverse engineered MACD. It shows you where the MACD and the MACDA, where the market has to go for the MACD to cross the MACDA.
Okay.
Yeah.
Boy, I didn't program that. The programmers did.
Well, whatever. It's a great tool. I mean, it really is.
Stan, make a note because you're going to walk me through that when I call you.
Sure.
Because I'm going to become much more proficient.
I also wrote a condition on mine that colors it, that not only tells you where it's going to cross, but the color of it will tell you whether it's above or below zero, which is the important part of MACD.
And Judd, going back to Europe, as you pointed out this morning, that ABB, which if you overlaid it to Fleur, you'd go, why doesn't ABB just buy Fleur? Because Fleur is so incompetent. But here's another gap. Let's see if we go back and fill it from February. Wow. 2390 on ABB. But you know what? Any type of massive infrastructure program on green energy, and ABB will be involved in, and they've proven that they're a much better run company than a lot of these large engineering companies. So you rightfully pointed that out.
Yeah, there it is. So 2342 is a half of the gap. So you can expect some rejection there the first time up, and then 2390 fills it, and above 2390, you get a whole nother swing up.
Yeah.
Hey, Ira, something I found interesting.
But also the 200-week moving average on ABB, which we jumped above this week.
Yeah.
So you're caught now in a $2 range. It'll be interesting. Yeah, I'm sorry. Go ahead.
And it's a great cloud hold too. The 200-week and the top of the cloud.
Go ahead, Angela. I'm sorry.
Both ABB and Fluor had office complexes down in Greenville, South Carolina, which I found interesting. I drove past a big office building with big ABB on it, and I'm like, whoa, what are they doing here?
It's amazing.
Now that's not far from the BMW plant, which was freaking humongous.
Oh, that's one in Spartanburg. That's in Spartanburg.
Yeah. Yep.
But look where this spread was, Ira. Look at this ABB spread in 2018. This spread was up, this is huge, the potential in this spread.
Yeah.
Ira, I wanted to take a tour of the BMW plant in Spartanburg, but, they were closed.
They wouldn't give you a wrench?
I don't even know. Do wrenches still exist on an assembly line?
You know what? I'm going to take I have a 2010 that I drive. 528. So I'm actually have to take it in at 1 o'clock today because you know what? I run it into the ground. It's got 88,000 miles on it. It looks like it's got 300,000 miles on it. Cars just, you know, and I take care of things, but yeah, cars, this one's kind of gotten away from me. If that's it, but I think we have a lot of things to watch here. With this yen euro, as far as the dollar, I think is important. You know, it's been my view for a while. It's been fighting a battle that it ought to fight, to tell you the truth. It ought to fight that battle.
And so we're basically looking at tomorrow's unemployment as being totally irrelevant again?
I would say, you know what? Philippa Dunn sent out a piece, and they're good. That's from the Licio group. And she sends me her work, and we chat back and forth. I respect her work. I respected John Licio before he died quite a bit. They're not even putting out any numbers because it's early in, and everything has been so disjointed. You kind of look ridiculous either way, right?
Right.
And now, and her point was well taken, and it's the same point I would make. What difference is it if you get a good number? You are now, everybody's starting to delay coming off of lockdown anyway, right? So going forward, the Fed, again, as I maintain, the data is meaningless until I get, you know, as far as I'm concerned, at least till about 5% unemployment. Because if they act as that in that social justice manner, they can't possibly raise rates. And again, the question is, and I'll pose it every time, come December, if you're at 9% unemployment and 6% inflation, does the Fed raise rates?
They can't.
No, they can't. And that's my point. That's why the gold is, to me, has done what it's done, because they know. And whatever the Fed does, nobody's going to break away from it, because you can't start raising rates because you'll really build your currency up. If the dollar goes down, it's going to go down because everybody's just sees through what the Fed wants to do. And you go, well, you know what? I don't have to be long dollars. And when they, you know, interesting too, the action has been back, you know, ebb and flow, ebb and flow, ebb and flow, since, you know, a lot of the banks paid down those swap lines that when they needed dollars, but they haven't really renewed them. And there really has not been a lot of pressure on the short end of the market, which would have been a test to it if they needed borrowings. Not there. So let's see what happens. You know what? Again, I will say this. The resistance areas we've discussed now for what, 3 weeks?
Yeah.
Have been very good on the euro. And the yen, you know, holds into. The Swiss, though, you know, let's go back to that. I think is broken out pretty big. And I'm sure they don't like it, but too bad.
Yeah, let's see here. There's the futures right there. It's a pretty good look.
Yeah. I mean, we're here. Let's put it up and let's go back to a weekly. So we'll revisit January of 2015. Okay. Just to give you perspective, you know, and that's when they let the peg go. But of course, other things were going on in the world. You know, I always look at those areas and we're getting back into them. You know, January 15th was the day.
You're looking at June, or you're looking at the other one from March?
I'm looking at continuation. I'm looking at February of 15.
Of 15?
Yeah.
Hold on.
That's really good overhead resistance.
Okay.
Okay. So now, Judd, you work the Fibos off of that January 12th week. But we can put up a daily and scroll back because CQG is such a wonderful machine. This is pretty easy to do. Okay, hold on. Okay, I put up a daily and scroll back, okay?
Well, you want that swing?
No, I'm just going to show you something. You see,
Okay, hold on.
you see January 15th.
You want the futures or the cash?
I'm in the futures.
All right, hold on. Okay. To where?
Well, I'm just, you can see on January 15th of 2015.
December. Come on, let me squeeze it. Okay.
Okay.
Yeah, so we're going to January?
15th.
Okay.
Okay. So you see that move. And then you see a little consolidation, as all the shorts who got their brains blown out, but then you go to to the late January, early February of 2015, you see all that consolidation area.
Yeah.
So in the 107 to 109 area where it consolidates. I just have that mentally in my head because that should prove very tough overhead resistance to any type of, and you see it. Actually, you know what? That's the area that it got up to in March of this year. On March 9th, we went up to almost 109. So it respected that real congestion area where it consolidated after that massive move in January of 2015.
Yeah, and that's like the half of that whole deal.
Yeah, so it's really beautiful. So now here we're up at 106. So it, starting to look good, but it's got work to do. But if you were to get above there, of course, it'll have to do it with everything else going with it. Yen, euro, they'll all go together. As the Tom Lehrer, when he sings about the nuclear bomb, we'll all go together when we go. They all have to go together.
All right.
Okay.
Yep.
I hope I'm not trying to focus you so nearly, but I'm just, walking through as I saw it today. And I really, as we started the conversation, the euro was 10 lower when I started. But the fact that the bonds, and they're not here, the Bunds are 120 ticks lower. The BTBs are 32 lower. So that spread is really, now, and I'm not even fading it today. If the euro doesn't go today, they're going to wear me out. But then somebody will come out with a leak from Reuters about that the talks aren't going well. We could play this game. But the yen is, even with the euro turnaround, the yen is held today. So let's see if this one works. If not, just another day of a nice trade, but nothing more to sink your teeth into.
Yeah, and you got this is the active daily. This spread is interesting because it's got, you still got a gap down here. The first time, when was it?
Which spread?
I'm looking at Bund Italian.
Okay.
The first spike down into that was on the 24th. They went to the half of that rollover gap.
Which 24th? June or May?
June.
Okay.
So June 24th, they went to the half of that rollover gap.
Okay.
And now they're kind of coming down, and just above the 200, the active 200 day in that spread is where it fills the gap.
Yeah.
121.47, 121.30.
Yeah, I mean, we're right into it. So
Yeah.
Let's see. But I clued you into what I was looking for. All right. Good stop. Over. So helps me get my focus. Good work. You guys have done really well. So keep banging it away. Angela, stay off the road.
I'm effectively quarantined now. Can't go anywhere.
Yeah. You know what? Why? Because you just came back from South Carolina?
No, the governor shut them down.
My wife works at a hospital.
Oh, yeah. See, I'm gonna go
I
pay.
can do whatever the hell I want, all right,
Yeah.
but she kind of can't.
Yeah, and
You
the
know, and
Europeans
your
are having,
your 2 week quarantine is unpaid.
Really?
Yeah, that's why I'm saying it's effectively a shutdown.
Yeah.
yeah, look at, and you still have a 4-day island top in the Dow Jones.
Yeah.
And you still have a 4-day island top in the Pitt S&P. And we're up into the, what's that low? Oh, that low is 1550, okay? There's a gap in the futures at 31.1550. They didn't fill it.
Mm. Mm.
Yeah, those
Let's
little
not forget
things.
that stagflation is historically super toxic for a lot of things.
Yeah. Yes, it is. Yes, it is. And I'm not using that word quite as everybody else wants to use it. I'm being really cautious. Because I could rip it. I could rip the theory apart in a minute because you don't have, stagflation a lot took place because of the strong negotiating position of private sector unions. It's just missing from the equation now. So you have to be very careful here because the only one who can really push wages would be the Fed through the creation of inflation. So you have monetary illusion, as they call it. So.
Well, New York City, Ira, has I think they said a $9 billion shortfall, and they're expecting to lay off 22,000 city workers in the fall.
Yeah, I know. This is not pretty.
So, I mean, my very simpleton definition of stagflation is just, declining or flat economic growth, but rising inflation.
Yeah, no, I hear you. I hear you, sir.
It kind of looks like that's what we've got.
Well, we don't have any. I mean, you're not. They would love to see inflation. Trust me, the Fed wants to see inflation. Nothing would take care of their debt problems.
I mean, where do you think they want to see it? Do they, food, energy, housing, computers, phones?
Well, they'd like to see and that would relieve a lot of the debt. So especially in Purdue, go look to see what the debt structure is, who's carrying the most debt, and who's the most problem, and that's where they would like to see it. Listen, Chris Whalen's been great, and I think it's absolutely right. Is that hey, banks are going to be sitting on some very, very bad commercial loan stuff and residential. There's a lot of people who need debt forbearance, on their mortgage payments, on their rent, And then if they're only saving what they have, then the Fed's worried about that people are saving too much. Trust me, it's a discussion taking place here when you see the savings numbers. Let me see. Hold on. Why don't I have that Harley Bassman piece? Shit. I love to clean out my mailbox, and then I get rid of the stuff that I should. Maybe I do have it.
Yeah, just hit the delete button.
I do because and my wife goes, "Wow," she says, "Yeah," because she holds on. I go, "I clean out everything. Get the fuck. Most of it is garbage." I can't. Harley, see if you can find it. He makes his stuff available. Harley Bassman. Okay. It's the macro. He's really good. Hold on, I'll get it.
Ira sent me a thing from his FT. 8,900 some articles he read last year.
Yeah, no, in the last 6 months.
in the last 6 months.
Yeah, compared to what's the average?
What, 300 or 400?
It was 680. That's why I was laughing. I was laughing.
I mean,
What
I
a
read
life.
the whole thing in the middle of the night when I wake up coughing and I can't remember any of it.
You know what? My problem is I remember my wife says I'm an idiot savant. I'm starting to agree with her. Okay, I'm going to leave
All
you
right.
guys there, but find the Harley Bassman piece today because it's worth the look because it discusses the whole savings issue. And it's a very important issue that you need to look at.
All right. Well, thanks,
Okay.
Ira.
All right, guys.
Welcome
Appreciate it.
back. Welcome
All right.
back.
Ciao.
Oh, ciao. Ciao, baby.
Enjoy your higher